Okay, no. Stop. We're not doing that. So I'll tell you why we're not doing that. Because imagine that you're this guy over here, right? You're Fed Chair Jerome Powell, okay? And for the last who knows how long, you've been telling people how strong the US market is and how resilient the US market is. And you're prepping for your big meeting next week. It's your FOMC meeting next week. It's the meeting where you've prepped everyone. You've told them just how strong the US economy is and how the US economy can withstand a 50 basis point rate hike. You've gone on CNBC, you've gone and you've told them about this 50 basis point rate hike. And then this happens. The US economy growth rate unexpectedly declines by 1.4% in a quarter. I mean, you've been on TV telling people how resilient the economy is. You've got on TV, you've told everyone how you want to raise interest rates, sharp rate hike next month. You want to go with a 50 basis point rate hike more than we've ever seen before, more than we've seen in the last 20 years. I mean, who does that? And then we get a GDP decline by 1.4%, a decline. I'm in the Fed. I can only laugh. The guy's gone out on TV, told everyone how he's going to raise interest rates by 0.5 because the US economy is so resilient. I mean, we have to laugh. Me fui andando a coger los amarillos hasta hoy. Okay. Jokes aside, I don't want to be Jerome Powell at the FOMC meeting next week. I mean, you've told the whole world that you can raise interest rates by 0.5%, the biggest in 20 years, and you're now going into recession. You're basically halfway to recession because a recession is defined as 2 or more quarters where you get negative GDP growth. Now we're at minus 1.4. And I think that the expectation, if I'm not mistaken, was like a positive. It was a positive. Yeah, so let's just quickly look at this article here. It says gross domestic product declined by 1.4% in the first quarter, making an abrupt reversal. The estimate was positive 1%. And now they're declining. I mean, just one last time for good measure. Anyway, we're going to talk about that. We're also going to talk about the Bitcoin chart. We've got Gareth Soloway coming on today. I want to talk to him about the Bitcoin chart. I want to talk to him about the NASDAQ chart because the NASDAQ chart, it's not looking good again. So you look at the NASDAQ chart again, you got the NASDAQ chart down again, 19.5 points. And remember, we now printed a lower low on the NASDAQ chart. So the NASDAQ also not looking good. And then you've got this chart over here, which is the Dixie. The Dixie is exploding. Okay, now this is not a good explosion because this is not an altcoin. This is the Dixie. The Dixie is exploding. So we're going to talk about all of that on this day. Lots to talk about. I'm also going to talk about some altcoins. I'm going to talk about Solana because there's something going on in Solana and I think we need to pay attention. Miles did a video on it the other night. So lots to talk about. I wasn't here yesterday. I'm back today. I'm back in full force. Let's...
Y la encontré porque estaba la ballena agarrada metida entre las piedras de chipiones del faro. Y cuando entra...
Okay, enough. Okay, give up. Alrighty, guys. Welcome back. I took a day off yesterday, but I'm back here today. Apparently, I didn't miss much yesterday. I was watching the markets. It seemed like it was just another boring day on the markets. Not much going on, so I think I'm kind of glad that I took a holiday. But I'm back today, and we've got a lot to cover today because we're kind of making up 2 shows into 1 show, and then we've got Gareth Soloway coming here today. So I think today is going to be quite a big show, quite a fun show. Carl, you need to talk to me about this Dixie, this dollar index, because you tweeted something very, very, very scary about the dollar index. So we're going to talk about that, right?
Sure.
Yeah, we're going to talk about that. Is it bad?
Am I coming on?
I'm saying, is it bad? Is it bad what's going on with this dollar index?
If it closes there, it could be, potentially.
Because if I look at this dollar index, the last time that the Dixie was above, and remember the Dixie is an index of a measure of the strength of the US dollar relative to other assets, other currencies. And the last time that the Dixie smashed this 103 level was in 2004 on the way down, and before that in December 99 on the way up. So we haven't seen the Dixie or the dollar this strong in 20 years or something like that, which is crazy. And for as long as this dollar index is going up, we've got a bit of a problem because everything is going to keep going down relative to the US dollar, which means that assets are going to reprice, Bitcoin is going to reprice, stock markets are going to reprice because they're all going to have to become weaker against the dollar. And that's the problem. That's exactly what's happening here. It's exactly what someone said in the comment here. It said, my Dixie is getting very big. The Dixie is getting that Dixie is getting very big. The Dixie is getting very big. Anyway, let's quickly talk about Bitcoin. So what we did have today, we had a little bit of a reversal. We were at like 39,000, 39,500. We were climbing up, and then we got knocked down again. And again, you want to know why we were knocked down? It's because of the NASDAQ. So the NASDAQ futures were actually up earlier. So you can see, if you look, let's go onto the 1-hour chart. If you look at where we were a couple of hours ago, we were actually up. So the NASDAQ was up like 200 points above where it is right now. And then bang, down again on the market open, the NASDAQ down again. And I said to you guys earlier this week, I said, we're going to have a rough week on the NASDAQ. We're going to have a rough week on the NASDAQ because this is the week of the biggest earnings week of the year. So I don't know if you remember, but I showed you this chart on Monday, and I said, look, expect a rough week because you were having a rough week anyway. And then all of a sudden you've got the biggest earnings week of the quarter. So you had on Tuesday, you had Microsoft, Alphabet, and Visa. Wednesday, you had PayPal and you had Meta. And all those actually pale in comparison to what's about to happen today. So let's quickly take stock of where we were earlier in the week. So Microsoft over-delivered on their results. They got it rewarded by the market. Google got obliterated because they missed their forecast, so they got obliterated. Then you had PayPal, and then you had PayPal and Facebook, or Meta. Both of them overperformed. So both of them beat Wall Street's expectations. And with these kind of results, it's much more about how you perform relative to expectations rather than how well you actually did. So if you look at, for example, Facebook. Facebook had a terrible quarter. I mean, terrible quarter. But they performed better than analysts' expectations. And so the market rewards them for performing better than expectations. I know, crazy, but that's how it works. That's how it works. It's all about how well you perform relative to expectations. Except for this, because the expectations were that the US GDP was going to grow by 1%, and then it declined by 1.4%. We're going to talk in a second about what that means. So what I said was, I think that I think we were going to have lots of volatility, and we're going to have lots of volatility. We had lots of volatility, and I think this volatility is going to continue until the 4th of May, which is next week, when they have the FOMC meeting, and Jerome Powell comes back with a guidance. And now he has a curveball that has been thrown at him, an absolute ridiculous, crazy curveball which has been thrown at him. And what is that curveball? That now the US is actually halfway into a recession. Because what they say is if you have 2 quarters of negative growth, then you're going into recession. And he's come out multiple times and he said, look, the economy is strong, the job numbers are strong, the economy can handle it. We can increase interest rates to stop this inflation thing. But now maybe not, because now all of a sudden he's got negative 1.4% GDP growth. And the truth is that he hasn't even started. He's just been speaking about lowering interest rates. He's been speaking about tapering. The tapering only starts to take effect now in May. the tapering starts to take effect in May. The interest rate hikes, yes, okay, we've had a 25 basis point feel the water, toe in the water interest rate hike. But the real interest rate hikes are only coming now. Like in May, we're expecting a 50 basis point interest rate hike. So I wonder what Jerome Powell's going to do next week. Because, I mean, I did check earlier, and it does still feel like the market is pricing in very, very strongly that there's a 50 basis point rate hike. 96.5% of people are pricing for an interest rate hike. So going to be super interesting to see what Jerome Powell does next week. In the meantime, let's just see here. Okay, so in the meantime, the bad week or the bad month for the NASDAQ continues. If you look at the NASDAQ, April has been, I think, one of the bloodiest months that the NASDAQ's seen in a long time. And unfortunately, Bitcoin is correlated to NASDAQ. If I look at where we are now on the NASDAQ, let's just go down here. We are down. I'm looking at the hourly chart, wrong chart. Let's look at the real chart, the daily chart, and measure where we are in April. So on the 1st of April. So there we go. We started April over here, 15,254, and we are now, we are 14% down in April. Remember, 14% down for one of the biggest markets in the world is ridiculous. I mean, it's absolutely crazy. And the week, we had a choppy week, but the week actually culminates today. And the reason why the week culminates today is because today you've got a whole lot of different results, but in particular, you've got results coming out of Amazon and you've got results coming out of Apple. And you can see that when you look at what makes up the NASDAQ, Apple is the biggest company in the NASDAQ. It makes up, it doesn't talk about how much it makes up of a NASDAQ. Oh, wait, 12.8. And then you've got Amazon making up another 7. So 20 out of the, I think the index is made up to 100. So 20 of that 100 reports today after the bell. So today is, I would say, the most important day when it comes to this reporting. We did see Twitter report earlier, and to be honest, it was like a nothing burger. It was like a nothing burger. Their revenue was 1.2 billion versus the 1.21 billion that's expected. They had slight earnings per share, which were better than expectations, but nothing happened with Twitter. The real action is happening today, and that is after the bell closes, after the market closes, it's going to be Apple and it's going to be Amazon. Now, if Apple and Amazon overperform, then we could get a little bit of a recovery in the NASDAQ, and we'll get a recovery in Bitcoin, because Bitcoin has been tracking the NASDAQ almost 1-to-1. I mean, you see Bitcoin goes up, NASDAQ goes up. NASDAQ goes down, Bitcoin goes down. So right now, we are unfortunately in the hands of the NASDAQ. You see the NASDAQ is down again, and Bitcoin is following it. So that's where we are. Let's keep our eyes open and look for those results after the bell, and see what happens. In the meantime, investors are getting super, super, super despondent. Like, it's not only in crypto. If you look at what investors are doing, so you look at investor sentiment, the investor sentiment is a historic pessimism. In 35 years, only 5 other weeks got this extreme. 4 during the 1990 recession inflation peak cycle, one in March 2009. But this is where the bull-bear spread is, which effectively shows the spread between bulls and bears. And right now, look where we are relative to that line. So investors are getting pretty demotivated in this market, specifically in the traditional markets. And you can see that the fear, where we are in the traditional markets, is we're at a point of fear. We're not in extreme fear yet, which is where we are in crypto. So in crypto, we're in extreme fear. Yesterday, we were in extreme fear. We were at 21. We are not in extreme fear yet on the traditional markets, but we are in fear, and investor sentiment is very, very, very low. And this is all ahead of Powell's meeting next week on the 4th of May. We'll bring you when he comes out and talks to the guidance, we'll do a live stream here on Banter so we can watch it together and we can decipher whether it's bullish or bearish. But until then, expect volatility. Expect volatility in traditional markets. And because we are so correlated to traditional markets, then expect volatility in crypto. You're going to get volatility in crypto. So that is where we're at. And in crypto hasn't been able to escape. Before we get there, I read this tweet from Peter Schiff. Now, I'm not sure that he's that smart, but this tweet he was right. He says Q1 GDP was negative 1.4 versus expectations of positive 1.1. If the economy is this weak, but he spelled weak wrong. You see, it says if the economy is this weak, so he spelled weak wrong. I told you he's not very smart, but he is quite smart. With interest rates this low, the next few rate hikes will push the economy into recession. So now, yes, we're going to be in a recession. So what do you do if you Powell and you are going to recession? That's what you got to ask yourself. Okay, let's talk about how this affects crypto. I don't have to tell you guys. Interest in crypto today, all-time low. All-time low. No matter how you look at it, the interest in crypto is at an all-time low. Look at the fear ingredient. Let's look at the fear ingredient index first. People are fearful. They're extremely fearful, and it's getting worse. And yesterday it was 21. Last week it was 50. It was a month ago we were in greed. So right now people are absolutely fearful. They have lost interest. No one, retail investors, do not care about crypto anymore. Look at the search volume. The search volume on Bitcoin and on Ethereum completely bottomed out. This is the metric that I keep talking to you guys about. This is new weekly subscribers on YouTube channels. Okay, so you look at the new weekly subscribers on YouTube channels. That to me is the ultimate metric of retail, because retail, when they come into crypto, the first thing that they do is they go to YouTube and they try and Google YouTube how-to videos and what is videos and stuff like that. And so the crypto channels for me are always the best indicator of whether we're in a bull market or a bear market, and I always go to those channels to suss out the market cycle. If I look at the crypto YouTube channels now, we're at the bottom. I mean, even if you look at June, July last year when we had that temporary little dip, that we were nowhere close to how low the interest was in crypto. So that's where we are with crypto. And the question is, where do we go from here? And what are the smart investors doing? Because it feels like the only investors that are left in crypto are the investors that are either dumb, so either you're really dumb and you're still here, or you're really smart and you're still here. So if you're really dumb, you might still be here, but if you're really smart, you're also here. Or there's another class of investor, and that is people who have seen this movie before, people that have conviction, people who say, hold on, this time I'm going to do it properly. No, I'm not going to run away when the market goes down. I'm going to capitalize when the market goes down, and I'm going to look for the opportunities when the market goes down, because the last time that this happened, I made a mistake, and I'm one of those people. I'm one of the dumb people. No, I'm kidding. Maybe I am. I don't know. I'm one of the people who was here last time, and I remember when retail investors lost interest. Now, the only thing that happens when retail investors lose interest, a few things happens. The first thing that happens when retail investors lose interest is the prices come down. And when the prices come down, what that means is that if you have conviction and you know what to look for and you can block out the noise of recession, and this recession is not going to make any difference to how blockchain gets adopted worldwide in the next 5 years. I promise you, whether we're going to recession now or not. So if you know how to block out the noise, and you've seen this before, and you have conviction in crypto, then you use this time pretty smartly and you block out the noise. And I'll show you. I mean, for those of you who are here, for those of you who are still here, you say we're in this together. For those of you who are still here, you're either here because you're dumb and you've got a very high threshold for pain, and you want to see how much pain you can go through before you actually capitulate, which is cool. I mean, I get it. There are sadists out there, people who, I don't know, cut off their fingers because they want to have pain. There are people like that in the world. Or you have been here before in 2017 and in 2015, and you know that these are the opportunities that you've been waiting for, because every time we eventually come out of this, and we come out of this stronger. So it's that, or you really have conviction in blockchain technology, and you're willing to block out the noise. But that's really it. There's only three types of people: those that have been here before and seen this, those that are here and trying to test their pain threshold, and those that are here and that really have conviction about the blockchain and the adoption, and you know that this is not going to happen. I saw this chart, by the way, before we talk about what those people are looking for. This is the Coinbase chart. So remember when Coinbase listed, people said that was probably a high for crypto. And that was And then you see the Coinbase chart has been going down, 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 down. And if you've set alerts like we've set alerts on Coinbase, you're basically getting an alert every day that says Coinbase has reached a new low. Coinbase has reached a new low. Coinbase every day, because this is a daily chart. So here you're getting a Coinbase has reached a new low. Here again, Coinbase has reached a new low. Then here again, you wake up in the morning, Coinbase reached a new low. Here again, it just shows you that the interest in crypto, not only the interest from crypto people, but the interest in traditional investors about crypto, because traditional investors who are not buying crypto may buy Coinbase because they say, okay, well, look, Coinbase is our way to get into crypto without actually buying crypto. You own the exchanges. But the interest is down to a low. Now, what does that say to me? Having been here in 2015 and having been here in 2017, 2018, 2019, when the interest is low, that is when we strike. That is when we strike. And that is when we start looking for things to buy. That is when there's no one else here trying to buy up the same things so we can actually get good deals. And if you are good enough to block out the noise, then you're actually looking for the right stuff. And if you're looking for the right stuff, what you will pick up, see the whales, what the whales are doing is they are buying. You see, so if you look at the whale holdings, they've been here before. Who are the whales? People that have been accumulating Bitcoin for a long period of time. There are very few whales that are accumulating Bitcoin for the first time at $40,000, because then they wouldn't be whales. Because you need 1,000 Bitcoin to be a whale. That would mean that you need $40 million if you want to become a whale today in this market. Okay, so these are people that have been here before. People that have been here before, what do they do in times of negativity and no interest? You see, they buy. They're buying. They seem to be buying. If you read in between the lines here, what you can see is that funds are also raising money. So smart investors, what they're saying is, look, this is the time for us to invest. And we're getting VC funds telling us that they have raised money. Andreessen raised. Now we see Dragonfly raised. Dragonfly is a relatively new fund relative to all others. And they raised a $650 million venture fund, which means that that's $650 million coming into blockchain. Now, just to point out that Dragonfly are very big in the near ecosystem. So you kind of ask yourself, what are they going to be investing in? Well, we know that they're very big in the near ecosystem. You can see that over there in the Cosmos ecosystem, in the Avalanche ecosystem. So that's what they're going to be investing in. If you know what to look for, you will read all the stuff that other people aren't reading because they're so distracted by the noise. What is that stuff? Well, last week we saw Fireblocks opening up Luna DeFi to their institutional clients. What happened? They immediately got $500 million poured into institutional DeFi using through Luna. You got Fidelity this week. I mean, people aren't digesting this Fidelity news because the market's so subdued. But what is this Fidelity news? The Fidelity news is that the biggest hold on. The biggest money in the world is the US pension fund money. It's the US retirement money. That's like the most money in the world. And the biggest provider for the biggest money in the world is now making it possible for companies to add Bitcoin to their 401k. Then you got Stripe announcing a partnership with Polygon to do USDT, I think it's USDT tipping. Then there's just so much going on from an institutional adoption point of view. And if you're smart, then you're reading between the lines and you're seeing this. If you're smart, what you're seeing is the fact that Goldman Sachs, who ordinarily wouldn't talk about crypto, what are they doing right now? They're exploring tokenizing real world assets in NFTs. So it's examining NFTs for tokenization of real world assets. Now that's a genius use case. So either you can be listening to all the noise, or you can be looking at all the facts and how we are progressing. I'll give you another example. If you haven't been paying attention, if you've been paying attention to the noise, you've probably been distracted, and you haven't noticed that Solana is absolutely exploding. So I know Miles Deutscher did a little a video on this, but Solana addresses are absolutely exploding. You can see Solana addresses, active addresses, are the highest in the last week, with 3.72 million active addresses. What are they doing on Solana? Primarily NFTs. And we saw the launch of OKBears, which is I think the biggest launch on Solana, certainly the highest volume launch on Solana. People are calling this like the Bored Ape Yacht Club of Solana. And the reason why it's taking off is because Solana has found a niche, or not even a niche, it's found the masses. Solana has found the masses. And it has made NFT adoption for the masses. Ethereum, if you're a part of the masses, you cannot trade NFTs on Ethereum. It's impossible. The gas fees are too high. The floor prices, it's made for people that can afford bigger things. But the real adoption is happening in the masses. And whilst everybody's talking about Bored Ape Yacht Club and punks and all that, what you've got Solana providing an opportunity for the man in the street, the masses, to be buying NFTs with lower gas fees. Okay, now this is this project, this OKBiz. I mean, I love the way that Decrypt. I mean, they blatantly go out and say, look, this is just a profile picture. Somewhere here they said it's 100,000 unique avatars, and they actually call it profile picture project, spanning 10,000 unique avatars. But if you're watching this, then you kind of know that there's going to be an explosion on Solana. You see Solana Apps. So Orca had 5,000 daily users on the 28th of Feb. On the 28th of April, it's got 100,000 daily active users. So what you're seeing is in the underlying technology, there's a lot of growth. But the problem is that the market is keeping the prices down. The Solana price can't move. The Solana price can't move because the Bitcoin price can't move. The Bitcoin price can't move because the NASDAQ isn't moving. But in the meantime, the adoption on Solana, on Luna, all these things are happening. They're all happening under the hood. I mean, just show you some more stuff that's happening. So we saw Coinbase listing GMT, STEPN, GMT and GST. That's the price. You've got GMT and GST. You've got now STEPN on a fully diluted valuation, I think also of 20 billion. You've got Ape Coin also on a fully diluted. Ape Coin is now the biggest metaverse coin out there. It's got a fully diluted valuation of $21 billion. Can you believe it? This coin was launched as an airdrop not so long ago, and now it's got a market cap of $21 billion. So what I'm saying is that retail interest is gone. As I said before, if you're here, it's because of one of three things. Either you're dumb and you want to inflict pain on yourself and you want to see how much pain you can inflict on yourself before you capitulate. And that's fun. Or you've been here before, or you really have conviction. If you've been here before, you've seen this movie before, and you know that this is the best time to accumulate. So you got to pick which camp are you in? Which camp are you in? Are you in the ones that want to inflict pain, the ones that have been here before, or the ones that really, really have conviction in the technology? That's what you got to decide. Which camp are you in, Gareth?
How's it going, Rand? Good to see you, buddy. Oh man, so I'm in the camp where right now we're holding support. You know you love it when I show my charts, so let's get those charts up.
Let's do it. Gareth, right. I must say we have to talk about a few things today. So we have to talk about the Dixie. Mm-hmm. We have to talk about the NASDAQ, and then we have to talk about Bitcoin. Because I mean, we can't just talk about Bitcoin. So it's not about that anymore. It's actually much bigger than that.
It is, absolutely. And I think the biggest story is that this week has been a minefield for Bitcoin because all the big tech companies are reporting, right? So we saw earlier this week Microsoft and Google. Then yesterday we saw Facebook. Today we're seeing Apple and Amazon report, which Apple's the biggest market cap company in the world, really. So this one today is the big one. If Apple can beat and Amazon, if they're both up tomorrow, look for Bitcoin to have a beautiful move to the upside. On the other hand, if they're down, watch out below.
Okay, but that's short term. I mean, you're talking about, what we know about company earnings is that companies report, the NASDAQ will respond even for a couple of minutes, maybe for an hour or two, maybe at most for a day or two, and then it moves on to other news. And I think there's much bigger news than company reports. There's, for me, 3 buckets of news that are much bigger than company reports. The first thing is that we're now halfway into recession because we've had a negative 1.4% GDP growth. Mm-hmm. Scary shit. Second thing is that you got the FOMC meeting next week. Yeah. And Powell is expected to to do something next week, and I'm not sure. I mean, we kind of know what he's going to do, but I don't know how he's going to justify it when the US is about to get into recession. And the third overhang that you've got is you've got this. So you've got the dollar index, which is entering like crazy levels, right?
It is.
Okay,
You're right.
Okay, so let's break all of those down and then put that in context of the charts.
Yeah, so I think it's important for us to recognize that the earnings from these companies, you're right, it's a very short snapshot of in time. But the bottom line is that it will perpetuate the bearish market in the stock market and cause a breakdown that could last for a longer period. And that's why you actually have to pay attention to it. On the other side of the coin, you mentioned the dollar, right? The dollar has been soaring. If we look at the DXY here, I have the same trend line you do, which is this level going all the way back to 2016. And that now the positive here is that the dollar is at resistance. So I do think the dollar is set up for a pullback. So that could be a small positive for not only Bitcoin and cryptos, but also for, metals as well, gold and silver and so forth. So again, you are at resistance. Look for a pullback in the dollar. The biggest fear, again, I have in the short term is that Apple report. Apple today is up a little bit going into earnings. This stock hasn't corrected that much. And that's what's the biggest fear for me is that when you have a company that makes up, 10% of the S&P 500 and more of the NASDAQ 100, it has a major sway on the overall market. And we know that the tech stocks are what wags essentially the tail, which is crypto right now. So that's a huge thing. What was the other one you mentioned?
So you got the Dixie. So let's talk about it one by one. First of all, I think Apple makes up 12% of the NASDAQ. And then you've got Amazon as well, which makes up 7%. So you've got 20% of the NASDAQ reporting today, which is huge.
Huge. Yeah, huge. Absolutely. And I think that's what investors have to be aware of. If Bitcoin, if we can get through this report today, then I would almost say you're going to get a rally in cryptocurrencies over the next week or so, even irregardless of the Fed, even forgetting about the Fed, because everyone knows that the Fed is going to raise by 50 basis points. That's already baked in. What we're fearful of is that this economy, which now we see that GDP print, which is a negative, are we seeing the beginning of a recession? And this is the scariest thing of all for investors is that, are we going to get a recession with high inflation? That's the worst case of all. It's called stagflation. And it's where, again, you have high inflation, but you have a recession. Usually recession, when you have inflation, it coincides with expansionary periods. And then people are making more money at their jobs so they can afford the inflation. Yeah. If we see a recession with inflation, what is the Fed going to do? Can they print another $5 trillion? I don't think so.
Okay, now let's look at the Bitcoin chart well, let's look at the Bitcoin chart.
Yeah.
I'm going to say, as much as the NASDAQ and Bitcoin are correlated, I'm quite impressed by how how resilient Bitcoin has been. We saw the NASDAQ down like 5 or 6% 2 days ago, and Bitcoin it held what I think is the critical channel support level, right?
Yeah, it did. So far it's holding. So I mean, if you want to take it from the bullish case for Bitcoin is that you need to see it hold this lower trend line. As long as it does that, it's at support, and support should give it a lift up. If it breaks this line, that's where I would start to get very, very nervous, where you're going to get a bigger leg down, because the bigger pattern here, remember, the bigger pattern, and this is just the facts, right? This down move with this sideways consolidation is a bear flag formation. So you need this to break, you need this to negate that flag pattern. You need it to hold this support right here, and then you need it to trade up in this range. And once that happens, then it's all systems go, green lights flashing, then Bitcoin can go back to its highs.
What is that level? So it's very small for the viewers that are looking on a mobile phone. What is that level that you say in order for it to break the bear flag upwards? What level does it need to break right now?
Now, currently it's right around 50,000, right? It is an upsloping trend line. So if it takes a month, it might be at 51 or 52,000. But right now it's currently at 50,000, which is interesting because that's a key even number as well. So we always focus on even numbers as technical traders as being psychological levels. So a break above 50,000 would get people really bullish, get them buying into Bitcoin again.
What could happen next week at the Fed meeting? So I think the market is priced in a 50 basis point rate hike next week. What else could happen at that meeting? What else could Powell do? What else could he say that could shock us?
So what I think could be happening is that Powell's going to look at that GDP number and say, okay, listen, I'm going to raise 50 basis points because he's already told the market he's going to do that. But I think if you're a Bitcoin investor or a stock investor, what you want to see is not as hawkish chatter. So hopefully he's saying, look at this GDP. We might be getting close to a recession. I can't raise as aggressively as I wanted to do. And if he just talks a little bit less hawkishly, the markets as a whole will have a big, big rally behind him. You'll see yields start to come down a little bit from this near 3% level on the 10-year. And that would be a buy signal near term for stocks.
Do you think that he wants that, though? Do you think that Powell wants the markets to rally? I think that best case for Powell is that he does as little as possible, saves his bullets, saves his ammunition, and talks the market down and keeps the market down. And I think if you look at it quite critically, I think he's actually managed to do that. So this is a NASDAQ chart. You've seen it. It's down in the month of April 14%, give or take, but it's down in the month of April 14%. Isn't that exactly what Powell wants? He wants the markets to not overheat anymore.
So if you had Powell's wish book, right, his dream book, it would be to bring the stock market down as much as possible, which will bring inflation down because people have less money to spend without causing a recession, right? So the big issue is, imagine if he causes a recession and it turns into a major recession like 2008 and 2009, and you see unemployment go to 12 or 15%. That would be a catastrophic event for him. So his goal is to bring the stock market down without causing a recession. I do wonder what excuse he's going to make for the GDP number going negative. Is it going to be, oh, it was during Omicron, these are backwards looking numbers, so it doesn't really matter? I mean, we don't know what he's going to say, but I could see that being kind of the excuse that he uses to still stay hawkish.
He's going to blame it on Putin. You know that, and I know that. He's blaming it on Putin. It's Putin. All right, I want to talk to you about this tweet. So QQQ is a proxy for the NASDAQ. You said that your buy level is 300, where there's major support. You thought it might hit there this week. If I look at where the QQQ is now, it's at 316 or something like that, right?
Yeah.
So maybe you can call it up on your screen. It's nowhere near. I mean, you're talking about another 5% correction in the QQQ if it was going to get to the 300 level.
Yeah.
Still...
And it may not this week, right? I mean, basically, I'm going to tell you this. If Apple and Amazon disappoint, it's getting there tomorrow. I mean, it's going to get there. Because, again, they miss, and you see Apple down 5%. Remember, we're talking about 20% of the NASDAQ 100. So if you have Apple down 5% and Amazon down 5%, you're probably getting it down there anyways. Now, if Apple and Amazon don't disappoint, then you won't see this level for a while. And I think the key is that it's going to happen eventually, unfortunately. It's just a matter of when.
Wow. So you're saying that the QQQ or the NASDAQ is eventually going to go down by another 5%.
Oh, at least. In all fairness, I'll go on record in saying the NASDAQ's eventually going to go down by another 20%, probably in the next 12 months. So, I mean, there's a lot of downside left here. And keep in mind what's going on, right? So you had this, and let's look at the S&P chart, because I think it's clearer here, is you had this move up from the COVID lows, which was ridiculous. And this was all on steroids, right? This was the market getting just obliterated with money from the government, checks to Americans, the Federal Reserve printing the money. And now the Fed's taking that all away and the government can't pass any new stimulus, right? So now you're getting this sucked out and you really probably are headed back on the S&P back down here, which is another 20% on the S&P back to the pre-COVID highs. And again, think about it logically. They stimulated, they pumped money in. Now they're pulling it out. The markets have no place to go but eventually down. You'll get great bounces, great trading opportunities, but down it goes.
Okay, but let's think about it logically, because you said let's think about it logically. So let's think about it logically, because you said it. So logically, you had the S&P at certain levels. They then pumped in $5 trillion into the economy, right? So you had the S&P at pre-COVID levels. Then they pump in $5 trillion into the economy. Now they are talking about taking out that $5 trillion, but in increments of $95 billion a month, best case, which means that they need 60 months, 5 years to take that money out of the economy. So, I mean, the way I see it, maybe people are overreacting. Okay, cool. You want to slow down? You put in $5 trillion, you're taking out $100 million a month. It's going to take you a year to get the first $1 trillion out. Let's talk again after a year. Let's see if you've managed to take out $1 trillion.
Right. And that's the big question is how far can they go? How much can they remove before they cause a massive recession and they have to stop? But the bottom line is it's not just them pulling money out. They're reducing their balance sheet. They stop the quantitative easing and they're tightening. So in essence, it's probably more to the realm of like 300 billion a month when you factor in those other things that they're doing. Because remember, raising interest rates works the same way. It sucks money out of the system because people say, oh, well, I could be taking the risk in stocks, but stocks look crappy right now. So I'm going to put my money in bonds where I'm going to get a higher percentage now. Not a lot of people do that, but there is some money that absolutely gets pulled out of the system for that.
Okay, so let's summarize this whole discussion. What do you do? What would be your best bet short term? And how would you be positioning yourself in a slightly longer term? It sounds like you're risk off medium term. When I say medium term, 3 months, you're risk off.
Yeah, so risk off three months out. Today, very, very short term, watch that Apple report, watch that Amazon report. You'll see Bitcoin immediately react to that report. Midterm, I do think the Bitcoin chart will trade lower. Long term, huge rally. Once you get this hiking out of the way, once inflation becomes more sticky and doesn't go away, and the Fed can't do anything about it, Bitcoin is the place to go. 500, $1 million, 5 years out, 10 years out, whatever it is. Huge bull long term, but you got to see a flush out first. We got to get this out of the system first.
How long do you think this is going to last? I mean, if you were to guess, and I know it's all guesswork, but how long until you think that this cycle ends and this interest rate cycle ends and this recession cycle ends and we go back into a reverse cycle?
So I think that if you just look at past cycles, we talk about 12 to 18 months. So from the high in November, 12 to 18 months out is usually where you make the low. And then it takes a little while longer for it to grind back and take out the highs. So I'd be in that camp. So that means we're already 6 months in. So you got maybe another 6 to 12 maximum. And then I think you're starting to move up. But you're going to get, if I'm right, you're going to get amazing buying opportunities in crypto.
Wow. Okay. So that means you got to have at least 20% cash in your portfolio. That's for sure.
Yeah, for sure.
All right, brother, man. Much love. Nice to see you again.
Thank you so much, buddy. Have a great day.
I can't wait for the day where we phone Gareth and he comes on and he says, I'm full bull. I'm buying right now. I'm all in. That's the day I want you back on the show. When you say, I'm buying all in. I'm going all in right now. All in, all in, all in.
Am I banned till then?
No, you're not banned. I mean, listen, every time we need a psychologist session or we're just about to go for a psychologist session, we'll call you so you can depress us. And then when we go to the psychologist, we've got something to talk about. So I've got a psychologist session at 5:30, which is in a couple of minutes. So now I feel depressed and I'll go there tomorrow. I'll be fine again.
Just think long term. As long as you're long term, you're good to go, buddy. I'm
long term, my friend. I'm long term.
All
right, buddy. Chat soon. Love Gareth. Love Gareth. But I'd say he's bearish 86.4% of the time. Yeah. Alrighty, guys. I forgot to tell you to subscribe to the channel. So if you're still here and you've managed to get through a whole show, just smash the subscribe button. Also like this content. I forgot to tell you to like this content. We got so caught up in the laughter. Tomorrow also, we're going to be doing more Bybit giveaways. So remember to sign up with the referral link below, and then I'm going to 10x someone's portfolio. So sign up, deposit money. I will 10x someone's portfolio, and I'll double 4 other portfolios tomorrow. Also, you don't say you were not warned. I mean, I read this tweet today by Alex Kruger, who's a very smart guy, and he says, always use a VPN. Always. Some idiots will tell you it's illegal. That's absolute nonsense. VPN are 100% legal, and privacy is priceless. Nobody needs to know your IP address, and ISP providers don't need to see everything you do online. And I keep saying it to you guys. If you guys are trading crypto without a VPN, you are being negligent. You are exposing your IP address. You're showing your internet service provider everything that you're doing. It is crazy. And I have told you before, get a VPN. If you don't want to support the channel, I get it. That's cool. If you do, there's Nord VPN. There's a referral link below. You click it. You pay $3.16 a month, and you protect your IP address. But please, I don't care. Please get a VPN. You will reduce your risk of hacks. You will not expose yourself to ISPs and to your governments. There's so many benefits that I can't even mention them. Anyway, I will see you guys again tomorrow because I got to go see my psychologist because Gareth depressed me. Until then, trade well, my friends.